Welcome to the deep dive, where we really get into the trends and the data points shaping our world. And right now, wow, there is one story just dominating the digital asset space: Ethereum. It's pretty amazing how fast things can change in crypto, right? And Ethereum's recent run is, well, a perfect example. Just a few weeks back, it felt like it was having a relatively quiet year, kind of sitting in Bitcoin's shadow almost. But then, boom, seemingly overnight, it just exploded. I mean, we're talking a really impressive 65% gain over just the last month. This is as of July 22nd. And that's significantly outpacing Bitcoin, even though Bitcoin had its own pretty good run during that time. So our mission today, what we want to do is really dive deep into this whole thing. We're going to carefully unpack the specific catalysts, the things that have fueled Ethereum's huge rise, and maybe more importantly, try to understand the underlying reasons why this upward path might just be getting started. Think of this as your shortcut, your way to get really informed on, what's probably one of the biggest crypto developments happening right now. We've basically pulled all the key insights from a really comprehensive analysis. It's called Ethereum Ascendant: Catalysts for its Meteoric Rise. So you get all the crucial stuff without getting totally overwhelmed by information.
Exactly. And that's why this is so important for you to understand. Because getting a grip on these drivers, it's not just about watching price charts flicker, right? It gives you really valuable insights into the market dynamics, the actual forces at play,
Yeah.
and the investment trends we're seeing evolve, and even, the deeper tech advancements that are shaping our whole digital economy. So as we unpack all this, I really encourage you, think about what stands out. What piece of this makes you go, or maybe shifts how you see this market long term?
Okay, let's dive in. The first catalyst, and you could argue maybe one of the most powerful ones right now, is this huge inflow of institutional capital. We've seen it before, haven't we? How institutional money, big money, validates an asset, propels it from like a niche thing into the mainstream.
Oh, absolutely.
So the big question is, how is this playing out specifically for Ethereum right now? What's the story with this remarkable run? What does it tell us?
Well, what's really striking is the timing and just the sheer scale of this shift. So spot Ethereum ETFs, the exchange-traded funds, they actually got their first regulatory nod last year. But their real impact, the kind that actually moves the needle in the market in a big way, that's only really been felt in the last few weeks. And it wasn't gradual. This was like an acceleration, a flood almost. The data makes it super clear. Ethereum ETFs pulled in an amazing $3.5 billion in total net inflows. And that was over just a 12-day period ending July 21st. That marked their 12th day in a row of positive inflows. That kind of streak, well, it says a lot about sustained demand for the big players.
12 days straight, that's significant.
It really is. And to put it in context, think about Bitcoin ETFs. They also had a great run, a 12-day streak of positive inflows. But their streak ended on July 21st, the same day Ethereum's completed its 12th day.
Oh, interesting timing.
Exactly. And what's maybe even more telling, possibly signaling a real shift, is that on several days during that period, Ethereum ETFs actually saw higher daily inflows than Bitcoin ETFs.
Wow. Okay.
Yeah. So it's not just a small blip. It looks like a real pivot in institutional focus. Or at least, they're broadening their horizons to seriously include Ethereum. These massive ETF inflows, there's really no doubt they are a powerful sign of growing interest from established institutional investors. This isn't just retail excitement, This is serious professional money flowing into the Ethereum ecosystem.
That's a really critical point. And when you think about what these huge flows mean, it does kind of echo what we saw with Bitcoin, doesn't it?
It absolutely does.
Institutional capital was just fundamental to Bitcoin's big bull run. It took it from, well, what many saw as a digital oddity into a legitimate, almost essential investment for a lot of mainstream portfolios. The parallel here seems pretty direct. This flood of institutional cash could potentially have a similar transformative effect on Ethereum, pushing it maybe into new valuation ranges, cementing its place in traditional finance.
Yeah.
And for you listening, these aren't just like abstract billion-dollar numbers floating around. Think about how the big financial institutions work. When they get involved, especially through these regulated, easy-to-access things like ETFs, it signals a much higher level of trust. There's infrastructure being built, there's legitimacy.
Yeah.
It fundamentally suggests this isn't just about quick price jumps or bubbles. It's about a change in who is investing. And that could mean a lot for Ethereum's long-term stability and growth.
Precisely. You can think of this broad institutional embrace almost like a stamp of approval. It signals that Ethereum is maturing. It's being accepted more widely as a real asset class. When these big financial firms, especially the ones managing serious wealth for clients, create products like these ETFs, it tends to significantly de-risk the asset in the minds of more, let's say, traditional investors.
Makes sense? Less scary.
Yeah. Exactly. Maybe investors who previously thought crypto was just too wild, too volatile, maybe too complex to handle directly. ETFs simplify all that. They handle the custody, the security, the direct market stuff, and wrap it up in a format these investors already know and trust. Getting plugged into these established financial rails, that's a huge step for Ethereum. It really opens the door for capital that just wouldn't have touched crypto directly before.
Yeah.
It democratizes access for those larger, more conservative pools of money.
Okay, so let's shift gears just a bit. We've talked about the big financial institutions, the ETFs, but here's where it gets, I think, really interesting. It's not just the investment funds. We're seeing public companies, listed corporations, directly putting crypto onto their own balance sheets. Now, that seems like a deeper level of integration, like it's becoming part of corporate strategy.
Yeah,
It's a pretty bold statement, right?
it is.
So what's the story with Ethereum specifically in this corporate adoption trend? Is it just following Bitcoin's path, or is something different happening here?
Well, you're right that Bitcoin definitely paved the way. It established that holding digital assets in a corporate treasury was, viable. It could be done. For a good while, Bitcoin was pretty much the main choice. If a company was going to hold crypto, it was probably Bitcoin. And the numbers back that up. According to CoinGecko, they track this stuff really well. There are currently 40 publicly traded companies holding Bitcoin. And it's not trivial amounts. Their combined holdings make up about 4% of the total Bitcoin supply. That's worth around $100 billion.
Wow, 4% of all Bitcoin held by public companies. That's significant.
It is. It showed that this wasn't just a fringe idea. It could be a strategic financial move for major corporations. But what we're seeing now is Ethereum really starting to gain ground fast among these companies looking to diversify their balance sheets with crypto. This suggests, a broader acceptance. They're looking beyond just Bitcoin. They're starting to understand the utility and potential of the wider crypto space. As of the analysis we're drawing from, there are 10 public companies collectively holding Ethereum, and the combined value is around $3 billion.
Okay, so fewer companies than Bitcoin, but still billions of dollars.
Exactly. And these aren't just paper promises. These are actual figures on corporate balance sheets. It shows clear, strategic intent. And there's some really interesting examples. Coinbase, obviously a big public player in crypto, holds about $430 million in Ethereum.
Okay, that one makes sense given their business.
Right. Maybe not totally surprising, but it still shows their conviction. But then you get someone like Bitmine Immersion Technologies.
Bitmine, they're a Bitcoin mining company, aren't they?
Precisely. Their whole business is traditionally focused squarely on Bitcoin. Yet even they hold a significant chunk of Ethereum, about $1.1 billion worth.
$1.1 billion in Ethereum for a Bitcoin miner. That is interesting.
It really is. That tells you something about how Ethereum is perceived, its strategic value, its utility, even by companies whose main focus is intrinsically tied to Bitcoin. It suggests they recognize Ethereum has a distinct role and potential that complements or maybe even rivals Bitcoin in certain aspects. And if we zoom out, look at the bigger picture. The total amount of Ethereum held by public companies right now, while it's growing fast, is still relatively small. It's less than 1% of the total Ethereum supply.
Less than 1%, compared to 4% for Bitcoin.
Exactly. And that's a really crucial point because it suggests there's still a lot of potential room for this trend to grow. Companies are clearly starting to see the different angles, the value in holding digital assets. And their reasons are evolving. It's not just hoping the price goes up. It's also about maybe hedging against inflation, strategically diversifying their assets. Increasingly, it's about signaling innovation, showing shareholders, customers, potential employees that they're forward-thinking. This kind of strategic move suggests digital assets are becoming, well, maybe even a necessary part of a modern corporate treasury strategy, not just some fleeting interest or a small experiment anymore.
That's a really critical point for you to take away. This isn't just individual investors or even big funds making bets anymore. When established public companies integrate crypto, specifically Ethereum, right into their core balance sheets, that signals a profound shift. It means these assets are moving beyond just speculation. They're being seen as legitimate strategic parts of corporate finance and innovation. It really pushes you to think about the long-term implications. If this adoption keeps growing, what does it mean for things like supply chains, payment systems, how companies interact with customers online? It could change a lot.
Okay, so we've covered the money flowing and institutional and corporate. But beyond the recent price action and all this external interest, what makes Ethereum itself so essential, so indispensable in the crypto world. It's easy to get lost in the market stuff, but Ethereum is fundamentally a technology, right, and a platform. So what about its core functionality, its reason for being? How did that underpin all this value we're seeing?
That really gets to the heart of it, doesn't it? Why does Ethereum continue to be so central? Well, it was undeniably a pioneer, the first mover in a really significant way. It was the first major blockchain platform to really introduce smart contracts to the world in a usable, powerful way.
Smart contracts. Okay, let's unpack that a bit.
Right. This is a total game changer. It transformed blockchain from just being essentially a secure database for recording who owns what currency into a fully programmable network.
Yeah.
Before Ethereum, blockchains were mostly about moving currency, like Bitcoin. With smart contracts, suddenly you could write code, rules, complex agreements directly onto the blockchain itself. Agreements that automatically execute when certain conditions are met. No need for lawyers, escrow agents, intermediaries, in theory.
Like a digital vending machine almost. Put in the conditions, get the result automatically.
That's a great analogy, yeah. It brings automation and, crucially, trustlessness to digital agreements. And this capability just unleashed this huge wave of creativity. Developers could suddenly build things that weren't possible before. Decentralized applications, dApps, entirely new kinds of crypto tokens, all running on Ethereum's backbone. Now, sure, lots of other blockchains have come along since then, many trying to compete, offering faster speeds, lower fees, different ways of doing things.
The Ethereum killers, they used to call them.
Exactly. But Ethereum's first mover advantage, it turned out to be incredibly powerful. Tremendous. It grabbed the majority of the developers early on. It built this huge, vibrant community. It established a whole ecosystem before most competitors even got off the ground. And that lead has been very, very hard to overcome. It's sticky. And there's a really good way to measure this objectively, to see the success in the actual usage of a blockchain ecosystem. We look at something called total value locked, or TVL.
TVL, okay, what exactly does that represent?
So TVL, total value locked, it's basically the total dollar value of all the digital assets, the crypto tokens, the stablecoins, everything that are currently locked into a specific blockchain's smart contracts and its DeFi protocols.
So it's a measure of how much money is actively being used within that blockchain's ecosystem.
Precisely. It's a direct, tangible measure of how much financial value users and applications are actually entrusting to that network. It shows active participation, confidence in its security, confidence in its utility. And this is where Ethereum's dominance just becomes undeniable. It's compelling evidence of how essential it is. Ethereum's TVL right now is a staggering $82 billion.
$82 billion locked in.
Yep. And get this. That single number represents about 59%, almost 60% of the entire crypto market's TVL across all blockchains.
Wow. So more than half of all the value locked in DeFi and other apps everywhere is on Ethereum.
That's right. And maybe what's even more impressive, what really speaks to its strength, is how it's managed to keep that dominant position. It's consistently held between 50% and 60% of the market's TVL for over 3 years now. Even with all the intense competition from newer, supposedly faster, cheaper chains.
So it's not just a recent thing. It's been the leader for years.
Exactly. It's sustained, deep-rooted leadership. It tells you the network is resilient, it's useful, it's trusted. The vast majority of important financial apps, the innovative digital assets, they choose to build on Ethereum. It's seen as the most robust and secure foundation.
That sustained dominance in TVL, it really highlights that powerful network effect we hear about, right?
Absolutely.
It's like a snowball rolling downhill. Because it has the most developers, it gets the most dApps. Because it has the most dApps, it attracts the most users and the most money.
Which makes it more valuable.
Which makes it more reliable, more secure, and then even more attractive for the next wave of projects and users. It feeds itself.
It's a classic virtuous cycle.
You can almost think of it like, I don't know, the operating system for this new decentralized world. Just like most apps used to be built for Windows or Mac because that's where the users and tools were. Most of the really significant apps, the groundbreaking financial stuff, it's built for Ethereum. And for you, our listeners, just so crucial to get this. Ethereum isn't just another crypto coin you trade. It's more like a foundational layer of the internet itself, a piece of digital infrastructure for a whole new generation of applications, financial systems, even new ideas about ownership online. It's enabling things far beyond just sending money around. It's laying the groundwork for, well, maybe the next evolution of the internet.
And this raises an important point, too. How does this big, robust ecosystem actually foster things like security and resilience? Because that's critical, right?
Yeah, absolutely.
Well, because it attracts the biggest projects, the most money, and crucially, the best engineering talent in the decentralized world, its underlying infrastructure gets battle-tested like nothing else. It becomes more secure, more resilient, just through sheer use and scrutiny. Think about the amount of development, the code audits, the research constantly happening on Ethereum. Potential problems get found and fixed incredibly quickly because so many smart people are looking at it.
More eyes on the code means fewer bugs.
Essentially, yes.
Yes.
It's this continuous process of refinement driven by this massive collective intelligence in its developer community. That makes it the go-to choice for serious long-term projects that absolutely need stability and trust. And all that effort just reinforces its position as, the beating heart of the decentralized economy, where the most valuable stuff is being built.
Speaking of foundational layers and things that are indispensable, stablecoins, they have been such a hot topic lately. You hear about them in crypto circles, obviously, but now increasingly in mainstream finance news, even regulatory discussions. Given all that attention and how critical they clearly are for the crypto economy to function, it makes you wonder, what specific role does Ethereum play in this booming stablecoin market? Because these aren't just some obscure tokens. They're effectively the digital dollars or euros or yen of the crypto world, right? Bridging that gap.
You're absolutely right. Stablecoins are becoming more and more central, indispensable, really, to how crypto works day to day. And just to quickly clarify, for anyone maybe newer to this, stablecoins are just cryptocurrencies designed to hold a steady value, usually pegged one-to-one with a fiat currency like the US dollar. Their main job is to be that bridge, letting crypto users hop between volatile assets like Bitcoin or Ether and a stable value without having to cash out completely into the traditional banking system. They provide liquidity, they're used for trading, for lending, they're the backbone of DeFi.
It's greasing the wheels.
Exactly. And on the regulatory side, you mentioned it, there's a really significant development recently. The U.S. passed its first major piece of crypto legislation. They're calling it the Genius Act, just earlier this month. And a huge part of that act deals specifically and very directly with stablecoin regulations.
Okay, so Washington is paying close attention now.
Oh, yeah. This isn't minor tinkering. This is landmark stuff. For example, it sets clear rules about the reserves stablecoin issuers have to hold, mandates regular audits. The goal is more transparency, better consumer protection, more trust in this sector. It's basically regulators saying, okay, stablecoins are too big, too important to the financial system now to be in a gray area. It signals they're becoming more integrated into the global financial picture. And at the same time, the total value, the market cap of all stablecoins combined, it's just been climbing steadily. It's now over $250 billion.
$250 billion in stablecoins.
Yeah. And that massive growth just underlines how widely they're being adopted and used for trading, lending, payments, even sending money internationally. They really are like the circulatory system for digital money.
Yeah.
Now, here's the fascinating part regarding Ethereum. While stablecoins can technically be issued on different blockchains, Ethereum is, without question, the most common, the preferred platform. It absolutely dominates this critical space.
Why is that? Security, network effects again.
All of the above, really. Ethereum is currently responsible for about half of the total stablecoin supply out there. That translates to roughly $130 billion worth of stablecoins running on Ethereum.
It's half the market. Wow.
Yeah. And think about the biggest names, the ones you hear about most.
Yeah.
Tether, USDT, USDC, DAI. These are the giants. And they all primarily operate as ERC20 tokens on the Ethereum blockchain. It's not by accident. It comes back to Ethereum's proven security, its huge network effect, its robust, battle-tested infrastructure, and just how widely adopted it is by developers and users. If you want to issue a critical asset like a stablecoin, you want reliability, you want broad reach, you generally choose Ethereum. And all this activity, all this utility brings huge benefits back to Ethereum itself, often in ways people don't fully appreciate.
Yeah.
Because stablecoins hold their value, they get used constantly for everything.
Yeah.
Trading on decentralized exchanges, lending protocols, payments. This generates incredibly high transaction volumes day in, day out.
And transactions on Ethereum cost gas fees, right?
Yeah, exactly. That constant economic churn isn't free. Users pay transaction fees, the gas fees, to get their transactions included on the blockchain. And crucially, no other blockchain benefits more from this nonstop high-volume stablecoin activity than Ethereum. Just look at this number. Over the last year alone, Ethereum earned over $6 billion in fees just from Tether. USDT transactions.
6 billion just from Tether fees.
Just from Tether. It's an incredible, consistent revenue stream.
Yeah.
And that money doesn't just disappear. It helps pay the validators who secure the network, making the whole system stronger. And it fundamentally reinforces Ethereum's economic value. It's become this incredibly profitable engine driving the decentralized economy.
That's really insightful. Thinking about stablecoins as that critical bridge between, the wild west of crypto and the more stable world of traditional finance. And seeing Ethereum as the absolute central player in that bridge, the main platform for issuing them, moving them around, using them, it really cements Ethereum's position not just as cool tech, but as vital financial infrastructure. Increasingly vital. And for you listening, recognizing this means seeing stablecoins as more than just digital dollars. They're like a foundational currency layer for this whole digital economy that's being built. Ethereum's deep involvement in that, being central to it, adds massively to its overall value, its security, its long-term importance. It's becoming an indispensable backbone for how money and value will likely move in the future. Okay, finally, let's tackle the big comparison. How does Ethereum stack up strategically against the undisputed king, Bitcoin? For so many people, Bitcoin is crypto. It's the first one they heard of, the biggest one.
It's the original gangster, yeah.
Right. So are they direct competitors fighting for the same crown? Or is the relationship more nuanced and maybe even complementary? What should you really understand about how they relate to each other? It comes up all the time.
It does, and it's a really important distinction to make because it's often misunderstood. The absolute key thing to grasp right from the start is that Bitcoin and Ethereum are not direct competitors in terms of what they were primarily designed to do.
Different jobs.
Exactly. Different jobs. Bitcoin was conceived, and it still primarily functions, as a decentralized store of value. People compare it to digital gold, right? Because its focus is on scarcity, there will only ever be 21 million Bitcoin. Its focus is on security through its proof-of-work system and decentralization, all aimed at preserving value over time, maybe acting as a hedge against inflation. Its design prioritizes being stable, hard to change, immutable.
Okay, so digital gold, store of value.
Right. Ethereum, on the other hand, is fundamentally a smart contract blockchain. Its main purpose isn't just to store value, it's to be a platform, a programmable foundation, an operating system, like we said, for building dApps, running complex code, enabling this whole ecosystem of digital innovation without needing central authorities. So yes, they're both cryptocurrencies, both use blockchain, but they serve two very different, though potentially complementary, roles in the wider crypto world.
Different roles, but investors still compare them, right?
Oh, absolutely. Despite those different functions, it's definitely true that many crypto investors do view Ethereum as an alternative investment to Bitcoin. This often kicks in when investors start to feel like Bitcoin, after its massive run-up already, might be getting a bit overvalued. Or maybe that its potential for truly explosive growth from its current huge size is just more limited now.
The bigger they are, the harder it is to double again.
Kind of, yeah. So this perception that Ethereum might offer similar, maybe even greater investment upside, but starting from a smaller base, at an earlier stage maybe in its growth story, that can be a really powerful driver for money flowing into Ethereum. Especially when you layer on all the other things we've talked about, the ETFs, the corporate buying, the ecosystem strength. It becomes part of a diversification strategy, a search for value, a bet on a different kind of growth within crypto.
Okay, let's put some rough numbers on that comparison, just for perspective.
Good idea. So right now, Bitcoin is trading around, say, $120,000 per coin. Its total market cap is enormous, roughly $2.4 trillion.
Trillion with a T.
Trillion with a T. It's a giant in the financial world, no question. And because it's so big, you constantly hear that question on forums from investors. Is it too late? Is it too late to invest in Bitcoin for those really massive life-changing returns, given how big it already is?
Makes sense to ask.
Now, compare that to Ethereum, currently around $3,700 per coin, market cap around $450 billion.
Okay, so significantly smaller on both counts. Still huge, but much smaller than Bitcoin.
Right. And historically, at least until this very recent surge we're discussing, Ethereum just hadn't appreciated as much as Bitcoin, either in price or total market value. But because of that difference in scale, because of this recent acceleration fueled by these catalysts, there's a strong argument, a compelling case to be made, that Ethereum might just have significantly more room to grow from its current value. Look, both are clearly important crypto investments, both serve vital roles. But if you're purely looking at current valuations and future growth potential narratives, Ethereum, with its ecosystem momentum and these new institutional tailwinds, arguably presents a more compelling growth story from where it sits today.
So this brings up a really important question for you listening to think about. How do investors, especially the smart ones, balance these different risk profiles, these different investment stories within crypto? Understanding that Bitcoin is mostly about being digital gold, a store of value, while Ethereum is this programmable foundation, the engine for Web3, that understanding lets you think much more strategically. Where do you focus your attention, your research, maybe your capital? It stops being about just picking the best crypto, whatever that means, and starts being about understanding the different value propositions. What are the use cases? What are the growth paths? Knowing these distinctions really empowers your own thinking about digital assets. It helps you navigate this complicated, exciting market with a much clearer head, a more nuanced view, moving beyond just following hype and really understanding the mechanics of how value is being created here. Okay, wow. We have covered a lot of ground today. A real deep dive into Ethereum's incredible rise, breaking down the forces behind it. Let's just quickly run through those 5 key catalysts we unpacked. First, that undeniable flood of institutional money through the new spot Ethereum ETFs, setting records, signaling real investor confidence.
Hmm.
Second, the growing corporate adoption, public companies strategically adding ETH to their balance sheets, a fundamental shift. Third, its core role as the leading smart contract platform, absolutely dominating in total value locked, the measure of ecosystem health. Fourth, its crucial position as the main hub for stablecoins, generating massive fees and acting as that vital bridge to traditional finance.
Right.
And fifth, its compelling position as a strategic alternative to Bitcoin, potentially offering more growth runway from its current size.
Yeah, and I think the core insight, the main thing we really hope you take away from this, is that Ethereum's recent surge, it's not just froth. It's not just speculation or hype. It seems to be fundamentally driven by real, tangible shifts, systemic changes in how institutions, corporations, and developers are adopting and using it. Its ecosystem is just incredibly robust. It keeps attracting value, fostering innovation, building utility, and that cements its critical and probably increasingly essential role in this whole evolving digital economy. It really is about fundamental value, widespread use, and a network effect that just keeps getting stronger.
So considering how fast things can change in crypto and looking at these deep drivers we've explored today, the accelerating institutional embrace, the corporate buy-in, the ecosystem dominance, what does all this tell you about how value itself is evolving in this digital age? And maybe what new stories, what new narratives might be just around the corner as this decentralized future keeps building? Something to think about.